What's up everybody? In today's lecture, I will teach you the ICT Sense trading model. The thing about his model is that he uses it on smaller time frames like 30 seconds, and in this lecture, I will teach you how you can use this model on 1 minute, 3 minute and 5 minutes effectively. Before starting the lecture, let me tell you something about the ICT trading strategies. The thing is, whatever strategy you are using, if you are using the turtle soup, if you are using the judo swing, these strategies work, okay? The silver bullet strategy also works. But the thing is, you have to manage your risk. Risk management is the key. Everybody uses the same strategy as yours. Like there will be thousands of people who use the silver bullet strategy. Okay, the win rate will be the same, but still some will be profitable and some will be unprofitable because what they do is they lose all their money in a single trade. Okay, they could win the next 4 or 5 trades, but what they do is they lose all their money in a single trade due to poor risk management. So the key is risk management. If you can do a proper risk management, even if you get 2 winning trades out of 5, you will still make money. My Twitter followers would know that recently I bought a 5K challenge account and I passed it within 2 or 3 days. So if you guys are interested, I will share the link of my Twitter. You guys can DM me. I will send you the screenshot of my trades that I took to pass that challenge. So it will give you the idea of how to manage the risk. Okay, risk management is the key. So now let's jump into the lecture. What is the model of ICT SAN? So right now you are seeing the 15-minute chart. This is Nasdaq cash. You can use this strategy for indices, for forex and for crypto too. Okay, and first you have to open the 15-minute chart or the 30-minute chart. Both works the same. Now you have to identify the swing highs and the swing lows. As you can see, this is a swing high, this is a swing low, again this is a swing low, and this is a swing low. So you have to identify the swing highs and these swing lows. Now you can see this is one of the swing high. Let me zoom it in, and the body is closed here. Okay, so I will draw a line from this point where the bodies has closed. So let me extend it. Now we drew this line from these bodies, okay, not from the wicks. We have to do the same, and we have to wait for the price to come up towards this point. And here you can see that the price came up to this point, it went up, but then it closed below it. In the next 15 minutes you can see that the price again went up and it closed below it. Now that the price has closed below this line on the 15 minutes time frame, we are interested in an entry here. But you cannot just take an entry after the price closes below it. There are certain points on smaller time frames. It will either be on 1 minute, 3 minute or 5 minute where you will get an entry. But before showing you those points, I will show you another example, the bullish example. You can see this was the swing low made here. Okay, we will draw a line here, and then you can see that the price came down. It gave a big wick, but again the price closed above it. Another candle, it came down and the price closed above it. Okay, so again you will be interested in an entry around this area, but we will shift to smaller time frames and we will see which time frame has given an entry. First we will discuss this example. Right now you are seeing the 3-minute chart, and here you can see that this was an order block. Okay, the price was supposed to come down from here, but what happened, the price closed above it and it gave you a bump. Now that the price has closed below this line on the 15 minutes, we are again interested in this fair value gap, because before it was an order block, then it became a breaker block. We will see if it becomes an inversion fair value gap. When will it become an inversion fair value gap? If the price closes below it, and you can see that this big candle came down and it closed below it. So now this will be my entry. I will be interested in this fair value gap. I will put my orders here and my stop loss will be above this swing high. Now you have to stick with your stop loss. You cannot just change your stop loss. Okay, if the price goes up, you have to take the loss. You should stick to your strategy, and you can target at least 20 handles. Okay, the least target is 20 handles. You can always target more, but at least it will give you 20 handles. Now let's discuss another example, this bullish one, and we will see which time frame gave an entry here. Here you can see that I'm again using the 3 minutes time frame. The price came down and closed above this line. Now I'm looking for an entry. So I will look for important fair value gaps. So you can see that we have got a fair value gap here. Okay, first it was a bearish order block. Okay, the price has gone above it, so you can use this for entry. And there is another one, a big fair value gap, and a big fair value gap is always an important one. So you can see the price came down, it closed above it, and then it went above this fair value gap, and you can see it got retested. So this is where I will get an entry. There was another fair value gap here, but it didn't give an entry, so I will take my entry here. My stop loss will be below it, and again I will target 20 handles. Okay, so you can find such trades everywhere in this chart. Okay, this is just example of the Nasdaq. I will show you some more examples here. Okay, so here you can see that this is the swing high. Okay, what happened? The price went above it, then it closed below it, and it came down. Okay, now I will show you some more examples. You can see this was a swing high, the price went above it, and then it came down. You can find such structures at multiple points. Here you can see the same thing happened here. So the main thing is risk management. Every strategy can give you profits, but if you can't manage the risk, you won't be a profitable trader.